meeting one, meeting two, meeting 17, meeting 25, essentially dragging along these founders, but on the outside, they project like nothing's going wrong.
And they're a breakout company that you invest at, 100K ARR, and suddenly they're raising their next round and they're at 2, 3, 5 million ARR and no signs of stopping.
Crazy overarching question that is looming in the room is, Michael, is venture dead? Hey guys, welcome back to the funding table. My name is Max Goldberg, two-time exited startup founder, Techstars alum, and I'm here with Michael. How you doing, man?
Fantastic. So, multiple time founder, started 3 companies prior to the current one I'm running, all in different industries, raised some capital for each of them in different respects. And then, started First Time Founder Capital, a firm that is brought in by early stage founders to get them to the point where they're both investable and investor ready. Then on the other side of the business, been building a network of active investors, hovering around 600 or so. Angels, VCs, family offices, CVCs have one-on-one calls with each one of them where I dive into exactly what they're looking to invest in, and then utilize that thesis data to send along clients that are a fit within that fund. So working with the founders to get to that point where they're investable, and then introducing that deal to investors looking to invest in exactly what they're building.
I think you've said that one or two times before. That founders is exactly how you deliver a pitch. Awesome, Michael. Well, it's great to have you back. Today, we're talking about a little bit of an interesting topic, what you would call an elephant in the room beast. Obviously, founders are typically used to hearing all about startup fundraising, how to raise money, how to close rounds, how to source investors. A lot of this education and noise is geared towards founders and raising money for startups. But something that's not really talked about very much for whether it's intentional or not so intentional, we'll figure that out here, is on the venture raising side of things. And how do these venture funds raise money to then invest in startup companies like the founders' businesses that we work with? And I think specifically, there's a lesser known topic that is happening right now in venture, the VC winter, the rise of the zombie funds. Michael, for the people listening, what is a zombie fund and what on earth is going on?
Yeah, there are sort of two ways to identify a zombie fund. A zombie fund is a fund that has not made an investment in the past 12 months, not a single one.
Yikes.
And then on the other side, because that is due to the fact that these zombie funds don't have capital to allocate. They don't have dry powder. Um, it's a huge issue, right? I'm sorry, do you want to jump in?
Yeah, so just for those that don't know, dry powder, talk to me about what you're just go into a bit more detail if you can, just for those listening.
Yeah, absolutely. So say you and I started a fund.
Hmm.
We raised 10 million. We take half of that as and save it for follow-on investments. So, we have clear winners in the fund. We want to invest and enact pro rata if we have it into that next round.
Hmm.
Um, and then that other 50% is put into new deals, investing in new startups. So let's say, we ran through that 10 million, or we ran through the 5 million that's allocating towards new investments. And now we don't have any money to invest in new companies. We could dip into that reserve capital. Is that something that some investors do? Probably.
Hmm.
But you definitely don't want to, exhaust the other 5 million, because what happens if you have an Uber, a Roblox, you name it, company in there, a breakout company that you invest at, 100K ARR, and suddenly they're raising their next round and they're at 2, 3, 5 million ARR and no signs of stopping. So,
Yeah.
um,
So correct me if I'm wrong here, but much like startups, investors, VCs, funds also have to raise money from their investors, much like
100%.
startups
Yeah.
would.
Yeah.
And what you're saying is that although these funds raise certain amount of money, whether it be 10 million for a fund, 20 million and beyond, we're at a point in time where these funds that have raised this money to invest are out of money to invest in startups. And are they still taking meetings?
Indeed, they are. Most of them,
Huh.
they take meetings. They want to understand what's going on in the landscape. They want to have, the potential to invest if they do end up raising another fund. there's certainly a difference between a fund that is a zombie fund that is raising, that's currently raising. They just haven't hit their first capital call, which is, 25% of their goal, where they can actually utilize that capital to start investing. And then ones that don't have any sort of prospects on raising that next fund. They don't have the logos in that first or second or third fund,
Yeah.
that vintage to, entice LPs to come in and invest in a new fund. But zombie funds often take meetings. I was working with a founder early on in first time founder. I ended up connecting with a firm. I won't mention them by name. I was incredibly excited because it was very well aligned with that client. And I was all, gung ho. I set up the meeting. It was a perfect fit. It was like that fund was created for that client. And then after the call, the CEO calls me and he says, "Hey, they don't have any money to invest. They don't have any money at all. So, yes, it may have been a great fit. They don't know if they're going to be raising another fund, and I just wasted 30 minutes of my time."
Gotcha. So this zombie-like analogy comes from the point that these are funds that seem to be alive. They're walking around, they're slow moving like zombies, meeting one, meeting two, meeting 17, meeting 25, essentially dragging along these founders. They know that they are default dead. They know that they don't have the capital to invest in these startups, yet they are wasting, is it wasting founders' times? Are founders the one making the mistakes because they haven't done their research to know that a venture fund is in that situation? Can you even discover that as a founder on your own? So they're slow moving, they're default dead, but on the outside they project like nothing's going wrong. Is that correct?
That's completely correct. And I think it's good for every founder to come in and just do a quick search on Crunchbase, right? You go in, you see that they haven't publicly announced an investment since 2022. Likely that vintage is already expired and they aren't writing new checks right now. Maybe they're fundraising, maybe they're gone.
Hmm.
Um, and the sort of flip side of it, which is sort of interesting. So I saw something about from 23 to 24, about 25% drop off in unique funds doing at least one deal in that
Hmm.
year. 25% drop off. So there have been 25% of those funds turned into zombie funds. And you have to think about it in the sort of inverse here, where you have, 1,000 funds, let's say. Obviously, that's a low number, but you have 1,000 funds, and 400 of them are zombie funds now because of the market, because of this is all like these aren't exact specifics here, but because of the market, because of the lack of exits or M&A, causing these funds not to have the inability to raise. And so now you have, what number did I say? 300 or 400?
400.
You have 600 funds that are still active, and now they're seeing all of that deal flow. They're seeing the deal flow that a thousand firms were looking to see. They're still seeing just as much, and now they're seeing more. So it puts them in the position where now they can invest in companies or request companies that
Sure.
are seeing more traction, that are, looking for lower valuations. They have that ability to negotiate. They have the leverage to say, "Hey, you can go to, one of the other 299 or whatever. I forgot the numbers, but you can go to those other
400.
funds, but they're just as swamped and they're seeing the same sort of deal flow."
Gotcha.
So,
So if you are a founder, okay, you're gearing up to raise, you're in market, you have an investor list, a CRM of sorts. Let's say you do your preliminary research on a Crunchbase, on a pitch book, you see that deal flow is low or non-existent. Say a fund that was doing 10, 15 investments in the prior years is suddenly doing one, two, or none at all. What are sort of the respectful but important questions a founder can ask, whether it be over email, which might not go well. Maybe you suggest doing that over call one. What are sort of the questions that founders can ask to do that homework without disrespecting an investor? It's a small industry, but
yeah.
also getting to the point where, hey, is this worth our incremental investment talking to this name? Or is this going to be a 10 call process just to hear they're not going to invest at this time? not having to do with the business, just out of their sheer lack of capital.
Yeah, I mean, I think there are a couple different ways to go about it, right? You could be sort of, I wouldn't necessarily tell a founder to email a GP and say, "Hey, do you have money right now?" Because that's a little bit disrespectful, like you said. You
Despite the
connect
same funds emailing the startup founders asking, "Do you have revenue?" But that's
100%. Yeah, a little bit of
that's a separate conversation. Yeah, continue.
I think taking that first meeting is beneficial.
Yep.
You may want to keep it to 20 minutes if you find out that they don't have any dry powder. But I do think that there are ways to go about it in that call. Ask them what their typical process looks like. Ask them if, what their latest investment was and why they chose that company. What pushed them over the line there, and then you can go back and do your homework if that's the only question you ask and see, their last funding round was in 2022.
Yep.
This is a clear signal. You could also be sort of blunt and transparent in that first call and have that sort of quote unquote founder energy. That I really don't like that phrase, but come in and just say, hey, look, we think you're a really great fit. We just want to know where you're at in your fund cycle.
Okay. That's a great one.
That's a great one. So it's not, hey, do you have money to invest right now? Do you have dry powder, which is not an ideal sort of setup, but hey, where are you at in your fund cycle? Are you in the beginning and you're really gung ho, or are you at the end where you're looking to be very specific and strategic on these last couple of investments? That way you can come in and understand where they're at with that. And I think if you end up coming into a meeting and like this client of mine, and you have the realization, or they tell you straight up that they don't have any capital to invest in any companies, you can always say, hey, we believed you were a really great fit. We love your thesis. We love what you're doing. We love the portfolio. We believe that we could be a great fit if you end up raising another round. But out of curiosity, who else in this industry,
Sure.
what other funds are you friends with that you think
Sure.
would find this really interesting?
And I think that's a great point that you'd hope, and I think you could expect in some cases that partners or any sort of, folks associated with one of these zombie funds likely are not very happy about their situation. Just like if you were a startup founder who couldn't raise money, you'd be pretty disappointed. Probably look internally and figure out what you could have done differently or what you can do differently. And I think that coming across good people, don't just write them off. You're saying if you're a startup founder talking to one of these funds, but play more of a mid to long term relationship game. They may end up raising a fund when the macro environment gets more promising, when rates come down, hopefully at some point within the next decade. We don't know. But I think playing that long game, they have friends. If they like you as a company and they just don't have the funds to allocate, it's pretty embarrassing. But one of the ways you're saying to salvage that is, hey, do you have any other contacts that are actively deploying, capital in my space with companies like mine? And maybe there's some way to get that initial believer, despite them not being an investor, involved in some capacity. I think having more champions in the venture side of things as a founder is always a great decision. Now, I'm curious. So we have this macro environment. Obviously, we're coming still off this pandemic. We're coming off, zero interest rate and the frenzy and the craziness that was going on in the capital markets in startup investing. 2021 was a hell of a ride. You could raise money on a Notion document or napkin, and there's several stories supporting that. And unfortunately, these companies have raised too much money at egregiously high valuations, and many are shutting down or having some sort of soft landing. Now, how do you see the venture asset class evolving? Is this zombie-like nature going to remain? Is it going to get to be worse of a problem? Does this mean the giant funds that are well capitalized just continue to win over the long term? Like, how do you see the industry actually playing out on the venture side, given that we just don't know enough?
Yeah, I mean it's really difficult to say. There are so many components to it, but I do think that, what we what we saw in the sort of frenzy that you mentioned was a lot of people starting venture firms, right? A lot of people raising capital The ZERP era, made it possible for, you exited or you were, employee number four at Uber, and now you can raise a fund.
Right.
So we give you 10, 20, 50 million. And I don't think that every single person should have a venture firm. I think that it's something that it's not for everyone.
It's not as easy as it looks.
It's not as easy as it looks. That's what I was trying to get to. Yeah. It's not as easy as it looks, especially getting those returns. And I think that, the zombie fund era I think that will always be a problem. But I do think that, if we open up M&A, if we open up IPOs, then some of these firms are going to start seeing what's called DPI, which is essentially, getting money, getting money from these exits, getting money from these IPOs, and being able to return that capital to investors. There's nothing more enticing to an LP when you go to raise that next fund than already giving them
Sure.
the money back plus some.
Yep, 100%. I think it's super interesting, and I guess the crazy overarching question that is looming in the room is, Michael, is venture dead?
No. No, I don't believe so. I think that there's always going to be very interesting opportunities. I think that, the greed is still there. We're still seeing like the news earlier this week, Zuck buying 49% of Shield AI. Right,
Scale.
there's always gonna be scale AI.
Yeah,
There's always gonna be really interesting opportunities. I think AI is going to produce a lot of companies that make a lot of money very quickly, and investors are going to want to take their piece. I just think that it's not as stagnant. It's an evolving creature, and we need to understand what that sort of macro looks like and take that into account. Um, and I think it's really important for founders to understand, how to go and do the research on these funds. I think it's incredibly important for them to figure out who their ideal investor is, why they're their ideal investor, build out that list, build out that CRM. It's something I don't see very often, to be honest, which is surprising.
for sure.
I often have to build that with the founders, um, and do a little bit of digging on them, right? You want to see what their portfolio looks like. You want to see if they're still allocating capital. If they raised a new fund last year, likely they're still allocating that, right? So
Yeah.
do your homework, do your research. It's incredibly important, and overarchingly, no, I don't think that venture is dead.
Neither do I. And just for everyone listening, if you haven't navigated the fundraising process before, or you have, it's worth remembering that this has happened before. There have been crises in early stage investing. There's been crises in capital markets. We've had not a lot of pandemics, but we've had these sort of macro issues, and whether or not we are dealt a tough combination of issues, which we currently see, it's not to say that this hasn't happened before, won't happen again, and generally, at least the American venture market certainly seems to survive with new innovation, new technologies, and certainly a ton of opportunity as of late. But I guess the final piece of advice that Michael's alluding to is this is a two-way conversation, just like you're told when you have a job interview, right? Not to just answer questions, but to ask questions. What does your firm value? Does your firm value XYZ criteria? Does that justify XYZ compensation, right? You can have this similar mindset with talking to your investors. If you feel like you're just getting grilled and you're answering all these diligence questions about your startup, you are not showing like you're in control, which also implies and makes the investor feel that you have never done this before, which is the worst thing that could happen to you, right? And then the third is, if they're sitting here asking you all these questions about your numbers, your background, team bios, legal formation, it's not disrespectful. In fact, it's a power move to ask tough questions, right? Michael shared a bunch here, but like, do you realistically think you'd be able to make an investment in my company if all looked great and if you loved the business within this quarter, within the next several weeks? If the answer is anything but yes, if we have our conviction, we write checks quickly, and the due diligence, you did your homework, outside to make sure that what they're saying is true, that if it's anything but yes, you're going to run into an issue. And time is of the essence with fundraising. So, look, Michael, I think these are great insights. there's certainly a lot to come with this zombie cohort of venture capitalists. It's going to be interesting to see how it plays out in the long term. But for the meantime, if any of you have any questions, topics you'd like us to cover, feel free to drop a comment below. Michael and I are happy to talk about anything with fundraising, venture, startups, growth, the horror stories, the successes, and really anything in between. With that being said, if you're looking to raise money for your startup, whether you just are considering it or are already raising around, Michael and I are happy to chat. There's a link in the description to apply and book a call with us. We're looking forward to seeing you on the inside. And I guess if you like this video, if you learned something new, like, comment, subscribe, and we'll see you next week. Michael, as always, great chatting with you.
Absolutely. And just one final thing, we can dive a little bit deeper into this in another call, but I just want
Sure.
to, I had a thought today. I had a conversation today that spurned this thought. Founders, do not wait until you have 2 weeks of runway to start fundraising. You want to set yourself up so that you can prepare and actually have those conversations without being extraordinarily desperate.
Raise out of strength, not weakness.
That's
Dom,
something we'll discuss a little bit more, but
Dom,
thank
you
you.
could, Dom or Will, you can clip that in the beginning in the highlight reel. All right, Michael, I appreciate it, man. Thank you.
Later.